Medifarm Labs, MEDIF stock, down here in the United States on the OTC. I'm working through a lot of the smaller companies. Medifarm actually popped up on my list. One of the things I look at sort of the top 10 listings for cannabis stocks, and Medifarm popped up. The reason is simple. Their revenue gains, quarter over quarter revenue gains, put them in the top three for this quarter, Q2. Now, Q2 was a record quarter, so a lot of companies pushed their numbers higher. The top 10 stocks, I've been putting them up on my website. The next one I'm going to do is, of course, fastest growing, top 10 fastest growing cannabis stocks. Medifarm, of course, is obviously hitting buttons for me. Let's jump in. I'll show you what the stock looks like, MEDIF stock. This one, like many stocks within cannabis stocks, Medifarm Labs is turning a corner. Things are looking interesting. And I'd say within 2 years, they might start turning things up. This could be an interesting stock. Let's break it down. Okay, here we're looking at MEDIF stock. One of the tightest ranges I have seen for one of the OTC stocks. This is a penny stock, trading right now roughly about 5.5 cents, almost 6 cents. As low as 4 cents, as high as 8 cents on this chart. The one thing about this stock is it has not collapsed like the bear market in the rest of the industry. The other thing about this is it has basically not moved at all. But let's break down what looks interesting. First, we see a pretty decent jump in revenue. Now, can they continue forward with these kind of revenue jumps? I've got the future revenue projections. They come from analysts who are looking at these at Medifarm Labs. And there is significant gains in the next 2 years, 2024 and 2025. So if Medifarm can continue with this and grow their revenue on a quarterly basis, things could be interesting. Maybe MEDIF stock could move. Gross margins, quite low. So growth in revenue will help tremendously. All right, gross margins, of course, you're paying for everything. And in those first few units going through the system, paying for, say, a grow facility and a dispensary or 5 dispensaries, depending on whatever kind of company you're looking at, you've got to pay the rent on all those buildings. But if you're not only pushing through, say, 10,000 units on a quarterly basis or a monthly basis, whatever it may be, your gross margins are probably going to be pretty low comparatively if you could be doing 100,000 and that was your expectations. So once you start seeing that bigger gain in units going through, gross margins will of course improve significantly. For now, they're well below the average for cannabis stocks. Medifarms came in significantly below. They're roughly hitting about 7% in gross margins. The average is about 45%. And of course, operating profits. So operating profits, now we usually show operating efficiencies on these stocks, but I'm showing operating profits on this one simply because there's basically no efficiency. Their revenue isn't quite there yet. What'll happen is as revenue grows, operating efficiencies will improve, and the chart I would show on that would be declining, which is what you're looking for. You get your top line revenue. You have your cost of goods. That gets you gross profits. The next line is operating costs. Subtract that from your gross profits, that gives you operating profits. Negative. EBITDA, of course, is kind of right there. There's a couple sort of variability in there, but basically operating profits and EBITDA profits are fairly similar, almost, and it gives you an idea. And this is the real goal for a company that's starting out. You want to look at this and say, can we achieve our goal? Every company out there has a plan, every single one of them. Since I look at so many companies, I don't necessarily care what your plan is. What I care is, okay, great, you have a plan, you've got this ongoing venture, and you're getting there, is kind of my take on that. I don't need to know the minutia of, you don't understand, we're going to do this and we're going to do that. That's every single company out there. My question to you is, are you doing it? And when we look at EBITDA profits, this is the first metric that you're looking for to answer the question if they're pulling it off. EBITDA lets you know if they're able to pay their core company costs. So getting to break even would be really important. Now, I did read something, one of the analysts thought that these guys were probably going to hit break even in 2024. That's awesome. Because at that point, once a company does clear that hurdle for EBITDA profits, break even, maybe they're at 50,000 units going through the system. The next step is, great, get to 60,000. Because those next units going through are outsized. You've already paid all your rent. You've already paid the salary for the CEO and all that stuff. You're at break even. You push through 10% more product, your margins on those are outsized compared to the first, say, 50,000 units. So at 60,000 units, your gross margins might exceed 45%, 50%, something like that. So that's why this metric is so important. Net earnings, of course, they're not really losing that much money. And they're not exactly, their total equity isn't falling off a cliff. In fact, just the opposite. That kind of piqued my interest a little bit. They did some financing. They got everything under control there. If they're able to get to break even on EBITDA in the 2024, and they continue their revenue increases, 2025 could be an interesting year for them with the stock. It's a penny stock. And considering what we're looking at within the industry right now, no one's paying attention to this one, and they really can't send it down too much lower, but that's not a gauntlet on the ground where they say, oh yeah, we can. Here is a look at revenue. You're looking at an increase that is a little less than double for the next 2 years. Given that, with these kinds of increases, should they hit their goals, that would be really positive for these guys, to the point where, yes, they could get to EBITDA break even. Then the next stop is, of course, net earnings positive. They're really not losing that much, so it's not a huge stretch. And if you nearly double your revenue in 2 years' time, should they be able to pull off that plan, their bottom line is going to look rich. And when you're looking at a stock that's only 5 cents a share, that gets interesting to a guy like me who says, fine, let me pick up, say, 10,000 shares real quick. It's not that much, but it could grow real fast. Here's a look one more time at the stock itself, flatline. And I'm going to keep kind of looking at these different kinds of companies. Like I said, I've got the top 10 sort of listings of companies. The next one I'm going to do, which I'm going to do probably over this weekend and put it out on Monday-ish, revenue growth rates. Which ones are performing the most? MediPharm Labs, MEDIF stock, is performing very high in that metric, as I showed you in their revenue growth rate. And it looks like 2023 and 2024, they're really going to turn things up. If that's the case, this is a penny stock that might be cheap. Make sure you hit that like and follow button. We'll see you in the next video. Got tons coming at you.